All right, traders, welcome to the VIP ALGO Mastermind event. And excited to be here with you, and really glad to get the opportunity to kind of share some of the things that we've been working on over the past month or two here. And we've got something really special for you. So we're going to go ahead and dive in and get started. So welcome everybody. So let's dive in. Of course, as we get started, we can't guarantee results. Products and services are for educational purposes. You know the routine. We are recording these events, of course, and there will be a centralized location where you can grab all of the recordings as well as the deliverables, which will be posted up there at some point, probably today. And so those will be in there for you. Got a couple sweet deals for you coming at the end of the session as well, of course, as always. So good stuff. So yeah, so let's go ahead and dive in. So what's our agenda for day one? Really the purpose of this event is to really pick back up where we left off during Algo Week earlier last month, I guess it was. And to pick back up where we left off there and to go deeper into more of a mastermind level of education. So that's what we're going to do in these next couple days is we're going to explore all the ups and downs of how do you not only create templates, but optimize templates in a way that it is seamless and ongoing, and you can really get the best scenarios moving forward. How do you combine multiple algos? How do you combine them on multiple accounts? How do you trade multiple prop firm accounts if you choose to do it that way? Maybe you don't want to trade for a prop firm. Maybe you just want to trade your own account. How do you do that? We're going to look at all of that here. As we get started as well, I want to give a shout out to our team, Lennon and Robert and Patrick. They have spent a good amount of time putting these templates together with us, and Jeff and I have spent a lot of time putting templates together. A lot of optimizations, at least 40 optimizations since we've been working on this event. So there has been a ton of work that has gone into putting this together for you guys. So we're excited to be able to offer this to you, and special thanks to those guys for putting in their time and effort, and of course special thanks to Jeff for helping coordinate everything with me and helping get all the templates together, as well as some really sophisticated Excel stuff that was much needed. And so everybody just give a cheers to Jeff and the team for their hard work. So
Yeah, that was simple Excel stuff.
yeah, that was the easy part, right? Yeah, exactly. Well, cool. Yeah, you got it. All right. So day one, what are we covering? We're covering optimization. Namely, how do we go about building something that is more like a business plan, more like how do I put all this together? You know, you look at the messy garage and you go, well, I don't know where to really start, right? And usually it starts with just starting, and the rest kind of goes from there. But we're going to give you sort of a layout of how do you prep all of this? How do you put this all together? So we're going to be looking at that together. So the algo portfolio concept, what is it? What's involved? What does that look like? Algo portfolio performance, because what's the point if we can't prove the concept? Why would we even be here with you? It would be a waste of our time and yours. And so we have proven the concept, and we're going to go over that together. What would be the benefits of diversifying your algos? Why would you want to do something like that? We're going to look at that together. And then performance comparisons between what if you only ever ran the same template and you never optimized? What would that look like over the course of, say, 4+ weeks versus optimizing each week? What's going to be the better outcome? And I think you could probably deduce what that is going to look like. We're going to talk about scaling, multiple positions. Do you want to scale in? Do you want to scale out? Do you want to leave runners on? We're going to look at that together as well. How to select the right markets for each algo, a little bit into sort of the AMA territory. We cover that stuff, but we'll go deeper into that. How do you select the right chart for each market? And how do you optimize faster? How do you improve that process so that you can become more efficient as a trader? Because the power of algos is it does a lot of things that traders aren't maybe very good at. right? More importantly, you can really, in a short amount of time, see what works for the algo and what doesn't. And that can steer you in the right direction to figure out where you need to be with that. How to avoid over optimizing. I think we can all agree that as you are maybe newer with algos, um, the sort of the standard is to kind of get stuck in over optimizing, to just really get a good back test optimization. It really looks amazing, and then you trade it the next week and it's just garbage. And so you go back to the drawing board and you optimize again, and you're feeling so good. Oh my gosh, last week wasn't good, but this one is. And then you go to the charts again and it's garbage. So how do you avoid over optimizing? And how do you approach it differently to where you can get consistent results? The most important thing to algo trading is not optimizations. It is to some degree, but the most important thing is results. I mean, we can all agree that's the only thing that matters. It doesn't matter how good your back test is. Doesn't matter how good the optimization is. The only thing that matters is, yeah, but did you make money? And you hear me say that all the time. Did you make money? That is our job as traders, to get paid. So how do we do that? And how do we avoid over optimizing? How to optimize multiple markets simultaneously. Did any of you know that you can do that? You can optimize multiple markets at the same time. Anybody aware of that one? Is that a new one for you guys? We're going to look at it. Who here has ever done that? Anybody here? I'm seeing crickets right now. Yeah, a lot of new. Yeah. We'll show you how to do that. Okay. And we'll show you where it might be applicable. Cool. So good stuff. So that is what we've got on the agenda today. So let's go ahead and dive in. So the algo portfolio concept, what is it? This is the idea that you trade multiple algos for the sake of diversification, just like you would diversify your stock portfolio. You might have a watch list. If you're a stocks trader, some of you probably trade stocks and options and so on. You may have, 20 different stocks that you're watching. And these are kind of your main stocks that are on your watch list. And at any given time, you may not be holding 20 different stocks. You might hold the top 10 to the top 15 stocks. And those are the ones you hold. And if one of them starts kind of tumbling and goes into a bearish mode, then you swap it out with something else. That's the same approach here. Now, why would you, diversify across 20 stocks? Well, because some stocks are doing this, some are doing this, and some are going rut-row. But the hope is that you would have 10 of these stocks, maybe a couple of these, and maybe a couple of these, right? That's the idea. Well, it's the same exact principle in algos. You might have one algo that's doing this. You might have another algo that's doing this. You might have another algo that's doing this, depending on the market conditions and how things change. So the idea is that if you are allowing the algos to trade for you, that you need to have at least a few different algos that are working together, because some are going up, some are going down, and some are going sideways. Okay, so that is the whole idea of this whole approach to trading. So an example would be you have 4 algos on 2 different markets each. This would be 8 algo iterations, meaning you're trading 8 algos at the same time. And some of you say, well, I can't really do that. Well, it depends. Some of you might be able to do that and you just don't know it. But the idea is if 6 out of 8 of those algos are profitable each week, then that should produce more consistent, regular winning weeks. Here's the thing with this approach. Most of us are familiar with day trading. And in day trading, we're so focused with each day. If you go and look at my day today, it is a big old fat frowny face. Markets were trash today. I'm going to vent for 5 seconds. Every single trade that I took, I get in long, stop, Hey, left me hanging. Next one, got in, going long. Nope. Stop. Hey, 4 trades like that today, man. It's brutal. So anyway, so some days are great. Some days are not so great. Here's the thing with algos, you're not focused on the day to day. You're definitely not focused on trade to trade. Whereas with day trading, you might be focused on each trade or each day, depending on the number of trades you take and so on. Algo portfolio, I want you to change your mindset to where this doesn't really matter anymore. The thing that matters is your week. Were you profitable for the week? So you had a losing day. Welcome to trading. It happens. Did you have a losing week? Oh my God, the sky is falling. Let's just throw it all overboard, light it all on fire, and let's start over. No. If you have 2 losing weeks in a row that are down, then it's time to start looking at, okay, I need to change some things up here. Your algo itself, each algo is going to have a losing week. This is a fairly certain promise that I can make you. That may not be the case. You might be really, really solid at optimizing and just see all the nuances and oh my gosh, it's great. Odds are each algo is going to have a losing week from time to time. But again, if we can diversify, even if half of those algos have losing weeks and half of them have winning weeks, you're still going to probably be around break even for the week. This is the whole idea. Outrunning all the challenges that traders face by diversification. It's a powerful concept, and I'm going to show you in the numbers just how powerful that is in just a moment. Okay, so we'll look at algo portfolio performance, reviewing the templates and spreadsheets. We'll look at the side-by-sides, and we'll look more detailed into the benefits of this. So let's go through these worksheets together here first. So here was kind of the approach to this whole process. And I'll do my best to kind of, oh, Jeff, you just spawned into 2 of you. Anyway, sorry. Let's go into this. So
Sorry about that.
Yeah, it's okay. So what I've got going here is we tested, I actually started with one of them to start at 6.7 and optimized for June 7th. And you might think, why on earth would you optimize for June 7th? And that's a very great question. This is my approach, always has been. I'm not saying this is the end all be all or it's the only way to do it, but it certainly makes your life a lot easier. Most people, and they would be right in a sense, would start with this and work their way back, right? Totally understandable. I get that approach. I do things differently. Just ask my wife. She'll tell you. I do a lot of things differently. Anyway, so I started with 6.7, optimized for 4 weeks. Then what do? I run that template from 6.10 to, what would that be, 6.14? Okay. Then I forward test. What's the result? Good, bad, what is it? Okay. Then I document what were my settings. This one in particular, we've got all the settings for you. We're going to give you all these, by the way. You've got all the settings that you modify. And actually, I'm going to go into one of the ones that I did because I have all these recorded down as to what the results were. Yeah, so here, let's look at engulfing. Notice what I'm testing here. I'm testing the size of the range bar. I'm testing the time to get out of the way for the opening bell. And I'm testing the stop offset on engulfing. And that's it. That's it. That's all I'm testing on this one. So I'm not over optimizing. I'm not looking to reinvent the wheel because I've already spent the time coming up with that first setting. So I record, what's the range? What's this? What's this? What you start to see in the process of doing this is I may start with my range at 4 to 20, but notice the highest number was 16. The lowest number was 6. So by doing this, I'm already starting to squash these numbers from 6 to 16 because I know that that is a more relevant range for that test. So the whole point of this is how do I increase my speed and efficiency in my testing? That's what I'm looking for. With optimization, I want speed and efficiency. Because if every week I've got to go in and optimize, let's say 6 different, templates, I want to be able to get through that quick. I don't want to spend an entire day doing this. I'd like to get it done in 3 hours or less each week. Because when I'm trading, assuming I'm trading algos, I'm not really focused in as much as I would be had I, if I have to get in, get out, and manage the positions and measure out what I'm trading and all that. The trade-off with algos is less of you, more of the algo, right? That's the whole idea. So rather than spending all your time during the day, going through and executing trades, you're trading that time in for time to optimize the algos. Does that make sense? So your schedule changes, which is a breath of fresh air for a lot of you who just kind of watch these things on the side as you're working for the day, or you've got other things going on. You can do that. Now, I would always suggest keep an eye on them, but that's the idea. So how do we increase speed and efficiency? While simultaneously getting better results and not over optimizing, right? This is what we're looking for. No over optimize. So over optimizing means you're going to have a really great back test. You get the idea. You get a really great back test, but the efficiency isn't there. That would show you that you're over optimizing. That's your first clue. Really great back tests, terrible forward results. You over optimized. Pretty much tell you with a good amount of certainty that it's over optimized. Either that or your strategy is junk, and that's not the case with these because they're good, right? So if we look at an example here, so here is the results. So run the optimization 621. These are the back test results. So on this optimization, I made 3,000, 75% win rate. I put the risk reward in there just because this one has a trailing stop, so that's why that number's low. Multiple positions and so on. 1.5 profit factor, drawdown's about 1,000. And drawdown ratio, I like to look at this. So what this is saying is what's the drawdown compared to the profit? Okay. Now, why would I want to know that? Because this helps me manage my risk. Because if I know that I've got $1,000 of risk to make 3,000 over the course of 4 weeks, these are all 4 weeks, then I know that that's going to be a good position for me as a prop trader. 3 to 1 is fantastic over the course of 4 weeks. 3 to 1 is great. That's kind of where you want to try to live. If you can triple your drawdowns on your optimizations, you're in good shape. You can see some of these were lower weeks. This one I didn't optimize for the record. That's why that one's different. But yeah, so that's where, so I record all the numbers, record what these are. Now, why would I record these? Why wouldn't you just use the template? I want you to think a little bit differently if you can. To always relying on the infamous algo to do the work for you. Who makes the money when the algo trades well? The algo or you? Who makes the money? You do. When the algo loses money, who loses the money? You. So whose responsibility is it to tell the algo what to do? You. It's your money. Do what you want. But I'm going to tell you, if it's my money on the line, I'm going to take this seriously. So if we know that whatever 95% of traders don't make money, be the 5%. Don't be the lazy person. I'll keep it PC. Don't Don't be the lazy guy going, "Oh, I lost money this week. Oh, the algos. Oh, I lost money. Oh." No, the algo didn't lose the money. The algo traded the way that you told the algo to trade. The algo didn't lose money. You did. I'm sorry. That's the reality. It's not the algo's money. It's yours. Stop letting the algos lose money for you. Take this seriously. Take this beyond what everybody else is going to do. You are here, and I'm sorry, I'm kind of preaching a little bit here on you, but this is so important to grasp this concept. Stop leaving your trading to chance. Stop leaving your money to chance. Take responsibility, take the initiative, understand how to get better at this process, because when you do, the money follows. If you focus on this process, you will do way better in the sense of being able to make money. I can't guarantee that you'll make money. I can't say that, but I can tell you odds are going to be much more favorable if you take the time to take this seriously. So why record these numbers? Because you need to know what these ranges are so that you can look at it and go, I just got a back test that came in with a 20 on the offset, and my range bar was 25. How many times have you seen a 25 range bar? Zero. How many times have you seen a 20 on the offset? Zero. You might be coming into a situation where you're starting to Frankenstein your optimization. It doesn't look like an optimization anymore, and it's going to give you horrible results. So you want to know what these numbers are so that you can understand where your outliers are. You hear me talk about in the AMA, the guardrails. The guardrails are meant to keep you in the line of what is relevant and what is not. Because if you're way out here on some freakish optimization, you're just not going to make that money that week. Odds are. Now, I don't know for sure because the markets are chaos. But you never know. But take it or leave it. Go the next step. Take this seriously. This is why you're here, is because you're serious about this. You would not have paid money to be here if you weren't serious about this, right? So I think we're all on the same page here, preaching to the choir, totally get it. But this is the approach, right? I'm going to give you that approach and take a lot of the guesswork out of it as much as I can so that you have this process, because part of the issue isn't a lack of desire, it's a lack of knowledge and understanding. We don't know what we don't know until we know. So again, that's why we're here. Okay. So this is the process. So week 1, these are my results, and these are the forward results. Back test, forward, back test, forward, back test, forward. Obviously, actually I didn't put these in here, but obviously we don't have results because this week is currently the week that we're trading. Obviously you don't know what the results are on something until it's done. So then what we do is I took each optimization and came up with an average optimization. Okay. Average optimization divided by 4. Why would I do that? Because there's 4 weeks per optimization. This gives me my average of what I should anticipate being able to make each week off that algo. So this algo is telling me, based on the optimizations over the average of these 4, the average per week is going to net about 670. Okay. So if I get close to that 670 or above, I'm clicking the heels together, laughing my way to the bank, because it did what it was supposed to do. So then we take the total results, okay, 17, 22, whatever, and then we take the average. What's the average result versus the average optimization? This gives me an efficiency number, 64% efficient. What does that do for me? Think about it this way. If you have 6 algos, let's say, that you're watching, and maybe, over the course of the 6 of them, not all of them you put on 2 markets, but let's say half of them you put on 2 markets, that's going to be 6 plus 3 That's 9 markets. That's 9 optimizations per week. Do this weekly. For crying out loud, do it weekly. I'm going to show you how to make it faster, so it doesn't have to take a long time. I pumped out 4 or 5 different optimizations plus the results in about 3 hours on one of them. It is possible. Now, granted, that was a price action. I think it was actually this one. It's price action. It's a little simpler. It's easier to get good results. Okay, so if you have 9 opportunities to trade, you're not going to trade all of them. What you're going to do is you're going to pick the best 5 or the best 4 out of the 9. How do you know which ones are the best? That number right there. That is what's going to tell you that in the past, based on the optimizations, this algo, based on that optimization, was more reliable than this one, which was 59%, more reliable than this one, which was 43%, more reliable than this one, which was 32%. And oh, by the way, pin bar MNQ happened to be the most efficient. But at the same time, there's a bit of an outlier here, and we're going to talk about that as well. Those of you that are familiar with statistics, you know there's outliers, and then there's, you cut out the best week and the worst week, and then you average the rest because the others are just going to skew the numbers. Okay. So that's an idea. So once you have done this for, let's say, I don't know, 6 months, do you think you're going to have this process down? And you do this for a month, you're going to have it down, especially if you're doing 9 different optimizations. So if you have 9, you put together these numbers on each of the algos, and you figure out what is going to make the most money, because the key to diversification is picking the best. You don't put all your eggs in one basket. So how do you pick the best ones? This is how. Make sense? What do you guys think? Any questions on this so far? You're tracking with me. Good stuff. Are you seeing how you can take this to the next level? How you can become more strategic in your approach to trading with algos? Don't trust the algo. Ever. What? Don't trust the algo. Trust yourself. Trust your own approach. Trust your ability to get better at this. Because if you do that, then you'll make the money. Okay. So just like, today, 0 for 4. Very rough day for me. And I pretty open about this stuff because it's trading. Welcome to trading. It's been a long, thankfully, and a long time since since I was down 4 trades in one day. It's been a long time, thankfully. Does that mean I'm a terrible trader? No. Does that mean my strategies are garbage? No. Just it's one off day. It's an outlier, right? But I still rely on my own ability to execute my trade plan. I still rely on my trade plan itself because I know what the equity curve looks like for this year, and it's fantastic. So I don't have any worries. It's one day and I can bounce back. I'm in a drawdown and I know how to trade out of a drawdown, which is another factor of something that you should strongly consider even trading with algos is how to trade out of a drawdown, which if you aren't familiar with that, we can talk about that some this week as well. Okay. Ah, cool. Do you always average the last 4 weeks or all the weeks you have data on? And I would do both, Curtis. Yeah, that's a great question. I would do both. I would look at the most recent 4 weeks as one number, and then I would look at the total across however many weeks you've tested. I would say when you're starting out, there's no reason to go back further than 4 weeks. I think you're just kind of beating the dead horse at that point. But moving forward, I would track this stuff every week. Yeah. And then look at the most recent 4 weeks and then the total. And that'll kind of give you some ideas because if this one is just a little bit better on the 4-week number than another one, but the total is like way better on this one, well, then you kind of got your answer right. It's kind of like the tiebreaker, if you will. So maybe you run them both. I don't know. Cool. So if you choose 4 different combinations to run live, when I then run the rest on sim each week, potentially rearrange, you could, although you could just run the back test at the end of the week and just see how it did. And that would be fine. These things are pretty right on as far as the trades in back test versus live. They should be very, very close. So I think you can kind of hang your hat on that. And really, if you're running 4, 5, 6 different algos at the same time, keeping in mind that's going to eat up some of the CPU, right? So good stuff. Okay, so let's talk about the elephant in the room. If anybody knows how to draw an elephant, go ahead. I cannot, so I won't. But let's talk about the elephant. Anybody want to guess what the elephant in the room is? What about changing times each week? You shouldn't really need to change times each week. The only thing that you might consider is like what I did here, where it's just start and stop time for the actual opening market. But otherwise, you shouldn't really have to. That would kind of, there's some things that, and this is a great point too. There's some things that are like, part of the optimization. And then there are some things that if you change those, that's a whole new direction. Like your destination, let's say you want to go to Chicago. Well, there's a lot of different ways to get to Chicago. You can take the tolls, and you can pay the lovely government of Illinois a small fortune to cross the bridge, and they'll gladly let you in for a small fee of about $15. Or you can take a train, and you can take a train into Chicago downtown, and they're kind of expensive. Or you could fly, and you're going to pay more, but you're going to get there quicker. But there's multiple ways to get there. Versus if you change, let's say, the market, if you change the time that you trade said market, if you change the bar size to some degree, unless that's part of your optimization process, which some of them it will be. This is like, you're not going to Chicago anymore. You're going to New York. Like, you've changed your destination. So there are some things that are relevant within the parameters of what you're currently trading. And there's some things that are like, new direction. We're going to reinvent the wheel here. Right. So that's another thought there too. If I want to trade in the pre-session or overnight, when I run an optimization or backtest for that specific, depends. It's a great question. If you're trading on a volume chart, if you're trading on a volume chart or a range chart or a Renko chart, any of these are loose. This for sure. If you're trading on a volume chart, you're going to want different optimizations for different time frames. So let's look at what are those time frames. Crude market pit opens at 9 till, I don't know when they trade, probably 2 or 3 or something like that. I don't know the exact times because I don't trade that late. But crude opens at 9. It is loosely affected by the open of the equities at 9:30. Loosely. There's some impact for sure. Then you have the equities, MNQ or NQ, ES, YM, RTY. These are going to open at 9:30. So when you're looking at pre-market on crude is going to be the European session until 9 o'clock. It's going to be completely different, and really till about 8:30 because there's some news events and stuff like that. So that time until 8:30 is going to be completely different than the trading from 9 to 9:30, and then 9:30 to, call it, 2 o'clock. Well, really till noon, well, let's say, is going to be another time difference. And then from noon to, 2 is going to be something different. And then 2 p.m. on, just good luck. That's my take on that. So you may have on that particular market, you may have multiple different optimized parameters, one for pre-market, one for, market open, one for, kind of the heavy trading, and then one for the afternoon. And, if you've got good results, I would always say optimize for the time you're most likely to want to trade. For me, it's going to be 10 to 11:30. I want to do most of my optimization in this time. Then I expand it out to see, can I trade pre-market with this template? Can I trade market open? Can I trade afternoon? But I'm always going to optimize based on what I want to trade. If you're a pre-market trader trading gold, you're going to look at the pre-market 3:30 to 8:30, and you're going to maybe even 8 o'clock. And that's going to be kind of your time that you optimize. On the equities, and I'm spending time to go through everything because this is a mastermind type approach, and we're going to go deep into all this stuff. Let's say you've got equities, pre-market, 3:30 to 8:30. This is going to be really the European session. Then you've got pre-market, which could be potentially different, maybe not. 8:30 to call it 9:15. Then you got the open, 9:15 to call it 10. Then you've got the heavy trading, which is 10 to 11:30. Then you've got the afternoon, which is going to be 11:30 to about 2:30. And then you've got late afternoon, which is garbage. Don't trade past 2:30. Please just stop. Well, what about the evenings? Why? There's just not a lot out there in those times. I don't know. I won't tell you not to, but after 2:30, I mean, that's when all the institutions are closing out their positions. So as far as the options books and all that stuff. So anyway, so that's kind of an approach to what if you are trading different times, different markets. Maybe you want to trade the DAX. And DAX is going to be great in the European session. It's a European market. Maybe you want to trade the 6A because you like to trade the Australian in the evening. Great. Do that. Cool. Okay. So the other thing that we did here is we compared what if you didn't optimize? What would be the difference between optimizing each week, going through the process, again, proving the concept that it is advantageous to optimize every week? You thought we were just making stuff up. No, obviously not. You guys are here, but we say these things for a reason because it's what works. We want you to make money. We really do. Otherwise, we wouldn't make these things if we didn't believe that there was an opportunity to make money with them. So if we've got, week one obviously is always the same. Week two, there was a $300 net loss by optimizing, actually. And then it was down to 232. And then something weird happened week four. Something weird happened where all of the profit that the original optimization had made, which was up to 1437, had been completely wiped out the following week. And it was negative 270, which is that result there. So by optimizing, we were able to have a net difference in the green of $1,900, almost $2,000 difference by optimizing each week. We did this for each algo as well to compare what the differences are. There's a $4,000 difference, $2,000 difference, about even on this one, which is fine. $1,300 difference there, $3,000 difference there. Actually, it was better, and then it kind of got rough. And then this one actually was not better. So we'll come back to this later. I've still kept it in here because I wanted to showcase some things on that. But clearly you can see in most cases, you're going to end up with a better result. Look at the difference between these two. Like this one's way down and then way up. So even if it wasn't better in the long run, like the question is, do you want your equity curve to look like this, or do you want your equity curve to look like that? Let's be real. We want consistent profitability because that protects us from drawdowns. Also keeps us mentally sane. So that is kind of the difference there. So all of these numbers are, input in here. So let's go through them. We'll go through these different numbers, what they were. So this one, average weekly is going to be about $3,700 on this template. Pretty active, about about 20 to 30 trades a week. So that's a pretty active template. Actually, very active. Week one, really, really solid, like amazing. Totally overshot what the average would have been, 3,700. Totally overshot it. If we were to take this week out for a second here, let's say, what if that's an outlier? Is the performance still good comparing these other weeks? Well, the other weeks are even, they're still 50% of the average. So that's solid. Anytime you're getting 50% or better on the optimizations, that's pretty solid, actually. Anytime you can get at 50% or above efficiency in your back test versus forward test versus results and so on, that's going to be great, because that's telling you, okay, this made 14 over that time frame. So if this was half and that was 7,000, and let's even double this and say, what if that's 2,200? How many of you would be upset making 7,000 with a $2,200 drawdown for the month? Like, not me. It's triple the drawdown. So, worst case, you can kind of look at it that way and say, it'd be great to make 7,000 over 4 weeks. Sorry, 4 weeks versus 2,200 drawdown. Not 1 week, but 4. Solid. Very good, right? So maybe that's an outlier. This one, great results. Didn't get re-optimized because the holiday was coming up, so there's just no point to re-optimize. So these are the different numbers: 69%, 2-point profit factor. This one kind of lived between that 2 to 2.5, which is great. Profit factors here, anywhere from, a little bit of a red week that week. And then the other ones, though, kind of live in that range to some degree, 1.5 to 2, which is solid, decent. And then decent drawdowns, though. If you look at it from a week to week, the drawdowns each week on the results are pretty decent. Nothing terrible. This one had a 73% overall on the efficiency. This actually was the best one. Came in the best. So shout out to Lennon, who put this together. Very nicely done. So this is a good one. This is pin bar on MNQ. Here's what I found is MNQ tends to be the easiest to optimize. Easier than ES, easier than crude, because crude's kind of more of an oscillating market, but there's a lot of tick count too. So this one, this chart on this one was a volume chart. I'd have to look. I can't remember what chart it was. I think it's a 1,600. I don't know. I've seen so many optimizations at this point.
Pretty sure it was 1,600 volume.
I'm kind of going cross-eyed at this point. I can tell you actually, because I've got it on a chart. It is MNQ. Which one is this? Pin bar?
Yeah.
Pin bar, MNQ. Actually, I don't have it on a chart, so I lied. But I think it's 1,600 volume. Yeah. So yeah, good stuff. We're going to look at this too, to where you can see all of your algos at the same time. And if you ever want to disable one of them, you just go. So we were starting to talk about the elephant in the room, so let's go back to it. I trade for a prop firm, and the very oh so friendly and always chipper prop firm told me these scoundrels and scammers were hedging positions on MNQ and NQ on one account so that they could make money and game the system. Then there were other traders who were trading MNQ long on one account and then MNQ short on the other account. Those dirty dogs. Yeah, this is about the extent of sympathy they get from me. But all that said, the lovely and oh so friendly prop firm said, screw you, traders. We're not going to let you trade long and short on 2 different accounts at the same time because you suck and we hate you. Okay, maybe they didn't say that extreme, but they won't let you do that. So The original idea is you have three algos trading MNQ. Obviously, you can't trade them on the same account because what if one's trying to go long and the other's trying or in a current short position? It's going to just be chaos. So how do you get around this? How can you possibly do this? Well, I would advise not to trade MNQ and NQ on different accounts. Obviously not on the same account. They won't let you. Because if they find you going short on one, long on the other, they'll literally close your account and tell you to get lost. So you can't do it. So what do? Here's my thought. We can filter this by instrument. We can just do that kind of thing to sort by instrument. If you find that you are live in a trade on MNQ, and I've got 3 different MNQs in here. I've only got one gold, one crude, M2K. This is going to be the best way to diversify, choosing multiple different instruments to run these on. That's going to be the best. There may be some situations where you really, like we looked at with Pinbar was actually one of them on MNQ that was really good. But so let's say I can pull up a chart on that later too. But let's say you want to trade Pinbar and CWAP. Well, here's what you do. If you're live in an MNQ trade, you go to your other MNQ markets and you turn them off. Problem solved. As soon as the trade is closed, we're back in business. So keep this window open at all times. All times. Keep it in front of you so that you can maneuver through these things. That makes sense? So when you look at these numbers that we're showing you, are you going to have exactly the same numbers? Of course not, because you can't trade multiple MNQs at the same time, unless you're trading in the same direction. But I would say, rather than going in and doing the drop downs to say, well, I'm in a long position, so long only, what I'm going to warn you against is in the heat of trading, you are not going to remember all of the time to switch from long only to long and short after that trade is done. I promise you, you're just not going to remember. Because when you got 6 different things going on at the same time, there's no way you can manage that process without losing your mind. So my suggestion would be, if you're in an MNQ trade, turn the others off. Whether you're trading them on different accounts or not. Obviously, if you're trading your own money and you only have one account, then you just turn them off as you get trades. I also would suggest keep it simple. Don't try to trade more than 2 algos on one market. Keep it simple. Try to do different markets. I threw the crude in here for thrust breakout, which by the way is really good. I've also got, I had a pattern finder in here, but maybe it's not. Maybe I moved it out of the way. I don't know. We'll see. Cool. So that is a way to get around. That's really the only way that you can trade multiple algos on the same market. Cool. Whether you trade them on different accounts or not. So in a sense, I just made your life easier because now you don't have to worry about it. How do you trade multiple algos on the same market? You don't. Good stuff. Good. Moving on. So what we've done for you is we've put together all of these. I'm going to give you this spreadsheet, by the way. We put together all of the settings. Not only did we put together the settings, what should you optimize and what should you not? How do I know if I'm over optimizing? Well, here's your numbers. Test 20 to 30 by 1. Test the entry offset, max bar delay, which you could lock that number in, and maybe you don't want to test that. You don't have to. Maybe you don't want to test stop offset. You want to be at 10%. Great. Run with that number. Maybe these numbers are going to be different for you. Maybe you want to do 0 to 50% by 5s. Great. Make it your own. But this is giving you what we tested in the optimizations and what came back and what the results were and all of that. We're trying to take the guesswork out of this so that, and oh, by the way, we have templates that are already pre-formatted with these numbers built in. Yeah, of course we record this. I personally would never test all these at the same time. Like never. My God, it's going to take you like a week just to do a back test. Don't test them all at the same time. So test the relevant stuff against each other. Maybe for that, it's EMA period and entry offset, and maybe that's one test. And then maybe you do, these as another test, or, maybe the stop loss stuff you do as a separate test, and then profit you do separate, and then you go to the VM. Don't do them all in one test. That would be my suggestion. Take it or leave it, but you can do what you want. But I think it's going to be a lot easier to break those up. When I did the MNQ, I put together, what were the tests that I did? Well, I test these two against each other. Then I test that one against the results from this. Then I test that one. Then I test this one. It's 4 different tests. It took me 17 minutes to optimize this algo. 17 minutes. So can you spare 17 minutes to get results like that? I think so. I think so. We can do that, right? Pretty easy. It doesn't have to, we don't have to like go in and reinvent the wheel. And oh, by the way, okay, what did CWAP do this week so far? I mean, obviously the week's far from over. Here it is. All right, so I think this is just this week. Let's see. Yeah, 22nd. Win, stop. So 2 out of 3. Whoops. 2 out of 3, then 1. So that's 3 out of 4. 3 for 5, 3 for 6, 4 for 7, 5 for 8. And then today, disaster, 5 for 10. Okay, so not incredible, right? So, but it's still, it's breaking even. There's only 2 days for the week, obviously, and today was just, we don't even get me started on today. So, but that's the idea. We don't have to reinvent the wheel. It's going to give you solid results. Okay. So Weibo, we dropped the Weibo out for this event. We were having some trouble with it in some regards to where the data was not correlating for us. And so we ended up swapping that for other algos. I know some of you had mentioned wanting to see that. We'll work on that one. We can circle back around to that and go over some stuff on that one. The biggest thing with Weibo, if I can at least drop some insight and knowledge, tight markets, don't even think about trading it. Don't do it. Trade it only on markets that are moving, like a CL, something like that today. Yeah, it's got a really either trending or wide range with a small market fractal, like a small chart, Yeah, that's my take on Weibo. All the other settings are constant, but you're making a suggestion for those. Yeah. So like, yeah, these. So for example, these were my ranges. I didn't really change them. Obviously, you can see there's a pretty broad range here, but I'm at like 10 and 11 was kind of the standard numbers. CWAP deviation just lives at 0.9 for me, and I may not even need to ever optimize this. It may not even matter. Like, is it really that big of a difference? Maybe not. And then this number on the swing was 15 each time. So there's not much of a change. The only number that was different was these and then this. So that's about the same week to week. And that's how you know you're not over optimizing too, is if the results are pretty similar. So yeah, and we have all of the optimizations. I'll pull it up as an example. So let's go. Let me pull up a new strategy window and we'll take a look at it. So if we go in here, go to backtest, let's go to CWAP as an example. And then template, load, optimizer. So this is pre-formatted and saved with all these numbers. And you can just expand them out, test a couple of them at a time, whatever. You can do that. Weibo, I can take a look at that for you guys. Yeah. Give me some time on that though, if you don't mind. We got to work with the dev team just to make sure everything's on the up and up on that. Okay. So once I know that your results will look the same as mine, then, and I know that with confidence, then I'll be happy to put something together for you. I will say though, we have traders trading that live and they're doing great with it. So don't let that deter you necessarily. Just don't put too much emphasis on the back tests right now. Okay. Just strips, but does not take trade. I don't know, Jose. Yeah, I don't know. I'd have to see it. I have no idea. That is suspicious though, right? I don't know. I'm not sure. I can't think of anything offhand, but reach out to support on that. Yeah. Good. Yeah, you're getting good results on Vabo. Awesome. Okay, so engulfing, so here, pin bar, we looked at this one, we've looked at the results, we've looked at the efficiency. Engulfing was about 64% solid, not going to like light the world on fire. Like it's going to be decent, but you're not going to have massive weeks or huge weeks or low weeks. Like it's pretty steady, which is really what you want anyway. There was a losing week in there, it's going to happen, right? But yeah, and this result was that week of the 4th of July, by the way. So, it's kind of a weird week anyway because of the holiday. So, but this one was really good, and it's super simple to optimize. 3 settings. This was on RTY on a range chart and engulfing. It's actually 2 positions, so it actually carries a runner on this one, I believe, if I remember right. Again, they're kind of all fuzzy right now, but CWAP we kind of looked at. This one clocked in at about 59% efficiency, really not much different from the original settings. So, and that's a good sign. I don't have any problems with that. Pin bar on MGC. Why did we pick MGC? We wanted to do something different. We wanted to put one in on GC for you guys as well. So this one, efficiency right just below 50%. I wouldn't let that deter you by any means. This one was optimized on July 5th for that week. So when you optimize based on a holiday week, sometimes it can throw things off a little bit, which is what happened here. So just acknowledge it, move on to the next week. What happened the next week? Great week. Profitable, solid, 70% win rate, 2-point profit factor, all is well, right? No need to reinvent the wheel. If you get 2 weeks in a row where it's kind of in the red, then it's time to maybe look at changing some things up. Okay, that would be my take on it. That's what I would do. But decent results, this one living at about 2,500 and average result is about 1,100. So good deal. Engulfing MNQ, not quite as good as far as the back test is concerned compared to the results. However, the results are solid. You have a losing week followed by 3 solid winning weeks, and nothing terrible there. So if this was again 2 weeks in a row, then maybe I'd consider changing some things, but pretty good. Let's go to hybrid. Let's talk about hybrid. This one, what happened here? Would you want to run this algo this week? This would be one that I would go, I'm going to pull it out of my diversification for now. I'll continue to optimize it. I'll continue to keep an eye on it. And as I start getting a couple decent weeks, I'll consider adding it back in. This doesn't mean I'm never going to trade it again. This would just mean I'm going to pause this one and I'm going to take a look at what am I optimizing? Am I optimizing too much? Is it too much to optimize? Am I getting a little bit out of control? It was only about a 12% efficiency. So if I have, 4 or 5 that I'm going to run these, and I'm going to stay away from that one until it shows that it can be successful again for a couple weeks at a time. Cool. So that's really the approach to the testing and getting things optimized and ready to go. We've looked at the templates, spreadsheets. We've kind of shown the idea behind it. We've shown the performance comparison of optimizing versus not. Now we're going to look at the benefits of that diversification. So you've seen all the numbers separately. And let's be honest, right? Like looking at these numbers, you see the algo launches and you're like, wow, it's this amazing profits. And oh my gosh. And it is, it looks amazing. That's to demonstrate what is possible with the algo. It is not to demonstrate this is exactly going to be your results because we have no idea. This is taking it a step further. However, when we're looking at these numbers, these are real numbers. These are real trades, really, forward testing. We didn't trade it live, but we forward tested everything. Okay, so taking it that next step. And the only reason we didn't trade it forward is because I'm running a trade room and I can't do all that at the same time, guys. So, but this is all forward testing. So real numbers. Okay. So let's go in. Some of you have already seen these because you were in the trade room. Here we go. So we're going to look at what the actual numbers are. When you put them all together and you get this giant spreadsheet that looks a little something like this. And what we did is we took all of the trades and exported them, all of them, not from the back test, from the forward testing, which is, testing the template from 7/12 would be tested from the 14th, 15th through the 19th, whatever the dates work out to be. You know what I'm trying to say. So we put all these trades together on the spreadsheet. It's 473 trades. This is all of the markets. 473. That's a lot of trades. Most of you probably not going to take 473 trades. You're probably not going to use all of the templates, but you might pick some, which we're going to look at as well. 473 trades. And you get a profit factor of 1.35. And you might think, well, that's okay. And it is. It's okay. It's nothing to, if this was a launch, you'd be like, 1.35, big deal, right? And you look at the risk reward and you're like 0.85, okay, with a 61% win rate, like, it's okay. Like, I would be better off if it was 1-to-1 at 61%, right? Maybe 65%. Now we're talking. So you look at this and you go, well, it's not amazing. It's not amazing, right? But then you look at this. And here is the key to this whole friggin' thing. Look at the drawdown compared to the profit. Now, mind you, this is for weeks. This is not a back test. This is forward test. Forward. So if you could make $30,000 with a max drawdown of 3,800, how many of you would be interested in that? Obviously, all of us. I think if I speak for everybody when I say most of us in this session, the virtual room, we don't even come close to those numbers. I know I don't. I'll just tell you straight, especially not this month. Last month, maybe. Last month was really good for me. But I'm not 10xing my drawdown. This is almost, we'll call it, it's probably about 9. The drawdown, what is that? Let's just look at it. 29,584 divided by 38.42. That's 7.7 times the drawdown in profit. Not for 6 months, not for 12 months, which even if that was for 12 months, that would be respectable. If it was for 6 months, that would be great. Very, very great. The fact that this is for 1 month, I challenge you to find a trader that can do that. Now, I get that this is hypothetical. I get that this is, but I'm just trying to illustrate the fact that there is wild, wild possibilities with this. And the thing is, the more algos you trade, the less likely you are to hit higher drawdowns. And you would think it would be the opposite, right? Because higher trade count would equal like more drawdowns. But that's not the case, because if all of them are consistently profitable, what happens is you're outrunning the drawdown with more trades, which sounds totally backwards. I'll give you that. But these are the real numbers. And you can see we've actually put in here high water marks and drawdowns. All of this is factored out so that you can find exactly where your drawdowns are. And here's where it hit the max drawdown, got up to 31.97 and then found its way out and then went back into drawdown and came back out. Went back into a long drawdown, came back out. Now, mind you, this is a lot of trades. So this is the daily equity curve from day to day. So we've got 19 days of trading in here. Let me expand this back out. Okay, so we have a little bit of a losing day there, a little bit of a losing day there, losing day, losing day. I don't see any others. A couple sideways days, that one and that one. But really, there's like 2 losing days in here out of this whole thing, which is phenomenal. I mean, you go a month with only 2 losing days. Let's do it. So this is all of the algos combined. The risk on this is $500 per trade, but we're going to get into that. You could use higher time frame moving averages. Yeah, that would be the way to do it. How many algos trading simultaneously? This is 1, 2, 3, 4, 5, 6. This is 6 algos altogether. Obviously, you're not going to trade all of them together because some of them, 3 of them are on MNQ. Okay. So what do? You pick your top ones. CWAP was good. Pin bar was good on GC. It's a different market. Run MNQ on CWAP, GC on pin bar, and M2K on engulfing. And you put a portfolio together with those 3 algos. So even if you only traded those 3, and even if you only had a max risk of $333 per trade, that's your result. 1,400 drawdown, 9,700 profit, better profit factor, actually, 1.55. If you can live at 1.55 and up, you're doing great. Really, really great, actually. So this is the benefit of using multiple algos on multiple markets, because you're less likely to hit the drawdowns because you got multiple things going on at the same time. And to have a max risk of 333 and only have a max drawdown of 1,400, again, really, really solid. So, and this is only 3 algos. This is just the 3. Cool. Are we kind of starting to see some new things? Are you kind of starting to open up about, man, there's could be something really here? Like, you're starting to see it. We're able to kind of demonstrate the power of this stuff and the fact that we wanted to put this all together so that you can do this. Okay. Good stuff. So I'll move this out of the way for now. So really that's the benefit of combining multiple algos, is outrunning the drawdown. And it's kind of backwards, but it works that way. Oops. We'll go over developing templates, runners, not taking runners, selecting the right markets, and so on. What else do we got? And then how to optimize faster. We're going to look at that as well, avoiding over optimizing. Cool. So we're about an hour in. Let's take a break. Why don't we take 10 minutes? Let's come back at 3:20, and then we'll go through some templates. Cool. So return at 3:20 Eastern. Quick break. Cool. We will be back shortly. All right. Be right back. All right, we are back in action. So that's a great question, James. James asked, any thoughts on different settings for sell versus buy signals? Sometimes that could work. Yeah, so what you would do, you would have two different settings on that particular algo. Yeah, Jeff already is answering. So one for long, one for short. You optimize separately, run them on two different charts. You just want to be sure that, they're not both trading at the same time, obviously, but odds are if you're running different settings, you should be probably won't see that. So in most cases, yeah, good question. Yeah, so you just run two different templates. Cool. So let's go into some of the algos here. I'm just going to get out of this for now. So I've got some of the algos pulled up here. I made that, move that out of the way. What I'm going to do is swap this one out. This was the hybrid, which we knew was kind of struggling a little bit here the last couple of weeks. I'm going to swap this out with one of these other ones. Was the pin bar on MNQ. So let's do that. So first thing I'm going to do is go in here, and I'm just going to find the hybrid and turn it off. Okay. Then I'll go in here, and I'm going to pull up the algo, but I'm not going to enable it because I need to know what chart I'm running it on. So I'll go in here, pin bar. There we go. And then I'm going to load the template, and it's going to be the pin bar MNQ 719 1600 volume. So here's all the templates, by the way. This is, you don't need all of them, but we're going to give you the optimizer and the most recent. But you can see we we optimized 4 weeks, actually technically 5 weeks if you look at it that way. All right, let me load it again just to be safe. MNQ 719. Cool. So I'm just going to put it on here, and then what I'm going to do is change the chart. Let's go to volume 1600. I'm just going to go 2 days because I just want to see it for this week. Hit okay. Okay, the chart's loaded. Now I just flip the switch and it'll do the rest. And there it is. Okay. So this would be, a good way to do this. Obviously we've got, MNQ, MNQ, and MNQ. So if you were running 3 different MNQs, then you just know, okay, well, as soon as I get a trade like this, if I'm in this trade, I just turn the others off so I don't get any trades. And then once you see the red line, just turn it off because you're not going to get any trades on it anyway once you're done for the day, right? So yeah, so this is all of the algos over the 2 days. So now this is only 2 days. So let's see, how are these new templates doing? Well, let's take a look. So we got 238, and then this one is 451. And then this one is negative 126. This one, 1966. Pretty freaking solid. Which one is this? Oh, the engulfing. Is that right? 2 days. La-di-da. That's awesome.
Not bad.
I'm like, man, I wish I traded that today. All right, and then this one is 423. And then this one is 350. All right. Pretty damn good week so far. I mean, let's do the math. I'll add them up here. 451 minus 126.
3,300.
Yeah. Jeff's like Rain Man. He already had it figured out. It's 3302 to be exact, Jeff.
Oh, sorry, I was off.
I'm messing with you. Jeff's like the walking Rain Man over here. Way smarter than I'll ever be. So too funny. Yeah. So, again, optimizing, getting this process down. What does that look like? Let's dive into it. Okay. But just wanted to show that to you so you know kind of, oh yeah, they could show that for the back weeks, but what about this week? No. I have no idea what's going to happen this week. All bets are off, but so far so good. All right, so let's develop templates, scaling versus all in. Let's talk about this for a minute. Should you trade with runners? Should you scale in or scale out? Here's my philosophy on scaling in and out. Start off all in, all out. Start off that way. As you get used to trading with the algo, then you can determine, do you want to scale in? Scaling in and out is really more applicable for like swing trading, really. Day traders, a lot of day traders are not scaling in and out. If they are scaling in, then they're just going to get in trouble from the prop firms anyway, because they don't want you to scale into positions. So dollar cost averaging, you dirty dog, how dare you? Okay, so I would stay away from it at first, though. Simpler is better. Keep it simple and then elaborate later. That's my take on it. When do you trade with runners? Yes. Or no. I don't know. When do you do it? I don't know. You have to decide. So here's some factors to keep in mind. If you are a self-funded trader, there's give and take. Like there's, if we have, this is our scale, and we've got, this is one side of the scale, and then this is the other side of the scale, and we've got this cool thing, and it's like, okay, that's my best scale, so don't judge me. It's fine. It's a scale. Just pretend. So if this is our scale, you have, in self-funded, there's give and take to everything. You won't scale each trade as well, as quickly. But when you get a good trade, it's really going to run, and you're going to be able to make more on that trade. You may have less drawdowns, but you might have more days with no profit, So you have to look at it like, what's the give and take to that? Here's my take on runners. Always test the runner separately. Test the runner separate. And you want to have at least 4 weeks, right? If you are if you're testing the runner, and the runner is at least as profitable as the original template, then trade with a runner. If not, don't trade with a runner. Why would you want to trade with a runner if it's not at least as profitable as the original template with the same amount of risk? Doesn't make any sense. You'd be better off doubling your position on the original trade because you're going to make more money that way. So test it separately. Once you know that it is at least as profitable as the original, then put them together. Half the position, half of it's going on the runner or whatever. Maybe it's 2, 3 positions. I don't know what you want to do there, but put it all together. And then reevaluate your drawdowns and reevaluate your profit. And profit vector is not going to be as big of a deal because that's going to change a little bit. But really, you're looking at drawdown versus profit. And does it make sense to leave a runner on? If you're self-funded, it's pretty easy to decide that factor because you don't have these drawdown requirements from the prop firms. Most people think, well, if I'm a prop trader, I shouldn't trade with runners. And that depends. Depends on a lot of things. If you are trading 2 entry strategies on one market, you're probably not going to want to trade with runners. If you're trading 5 strategies across 4 markets, God bless you. I don't know how you do it, but let's say that's the case. You might leave runners on 2 of those strategies because you have more of an ability to do that. So decide what works for you. Some of these templates do have runners, and they work great because of that. One of them, in fact, is the engulfing, actually. Actually, let's go look at the chart. I'll tell you. M2K. Let's zoom in and see what's going on here. Yeah, see how that stop is trailing on the second position? That was the first target. And then the stop trailed and got exited here. First target, trailed the stop. First target, trailed the stop. First target, trailed the stop. So this one does have a trailing stop and it worked really well that way. You could test it both ways and see what you like better. But I would encourage you on the stuff that makes sense to leave runners on. Why would I leave a runner on engulfing? Somebody want to chime in on that one? Could you leave a runner on CWAP? Yes. Could you leave a runner on pin bar? Absolutely. Hybrid, you probably should. Any of these would be great for runners because they're pullbacks and they're reversals. None of these in particular are breakout strategies, actually.
Hey, Jim.
Yeah.
Just to be clear for everybody, when you say runners, you're talking about adding a second position, which is a runner, not replacing the one, only, right? I mean, that's what you're saying, right?
Yes. Yeah,
Okay.
I would never trade with only runners, but you would take profit on your first position. Your first position would take profit here. The runner is just the one where your stop trails and it's going to get out once it pulls back. And maybe this trailing stop is too tight because some of these gave more profit. I don't know. You have to test it. This is what worked on this setting, but yeah. So runners are just trail stops. Second position with trail stops. Yeah. Yeah, ready, set, go. We can maybe look at some stuff there for sure. If we time permitting, anything's up for discussion really, because this is your event. You guys paid to be here, so I came in with some agenda, and you come in with more, and we'll all win. So good stuff. So it depends on runners are going to depend on what is the market going to give you. So think of it this way as well. If you're trading on a 5-minute bar on crude, are you going to get many opportunities for runners? Probably not. But if you're on a 1,000 volume on MNQ, which is going to be a faster chart, you're going to get more opportunity to leave runners on because your bars are going to be quicker. That makes sense? Obviously, on a 1-hour chart, you're not going to leave runners on because you don't have time in the day. You got to get out of the position by 5 on futures. So you have to kind of evaluate those things into the bar size, the bar type, the market. What makes sense? How do you know whether you should look at runners or not? How would you know? What's the easiest way that you can determine, should I start even looking at leaving a runner on? Somebody chime in on this. I'm going to start getting you guys involved so you don't have to listen to me talk the whole time, even though I'm the only one talking. But maybe nobody's talking. Okay. So back test is one way. But what is the back test going to tell you? It's going to tell you the numbers. Numbers are one thing. Is the market trending? Sure. But assuming you're looking back, let's say 30 days. Thank you, Curtis. Thank you. Curtis knows because I think we've been emailing some. Look at the chart. Yes, absolutely. Tom nailed it too. Look at the chart. What is the chart telling you? Here's the best way I could put this, right? In the world of trading, there are algos and there are traders. One of them is a tool. The other is a trader. So let's just replace this with you. So who do you want to be the algo and who do you want to be? Because if the algo is the tool, then you are the trader. But if the algo is the trader, then you are the tool. It's using you. That's the best way I can put it.
That's a good one.
Yeah, there you go. That's my joke of the day. That's all you get. So you are deciding what the algo should do. How do you decide what the algo should do? The algo cannot look at the chart. The algo can only look at the numbers, the data. It can only look at the data. You as the trader are the one that can determine what's going to work for the algo or not. So tell the algo what to do. Okay. So that's how you're going to know. That's the best. Selecting the right markets and charts. How do you think you might do that? So the way that this works is you start with a hypothesis. I looked at when we started this, we started looking at some different templates and things like that. We kind of looked at like what do we want to work on, which strategies, which markets. And we thought, okay, well, we'd like to do one on gold. MNQ is the easiest, so we'll probably do a couple on MNQ. And then I just thought, well, let's do engulfing on RTY because it's different. And that one can work well with range bars. So we're kind of looking at like, what do we anticipate? I'm ever reluctant to say expect because you can't expect anything out of the markets, but you can anticipate. It's kind of a looser way to do it. What do you want? What do you as a trader, what do you want the algo to do? Obviously make money, but how? What do you think is the easiest way that the algo can help you make money? Because the algo doesn't make money, you make money, right? So how do you get the algo to help you make money? The algo is the tool, you're the trader. So you start with a hypothesis, then you look at some results and you review the chart, and all of these kind of go together. There's no 1, 2, 3 to this. It's usually 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. My God, that's usually how it goes, honestly. There's a lot of back and forth. So you have to be patient with this stuff. Getting good opportunities to make money takes time. It just takes time. I don't know how many hours went into putting all this stuff together. I can tell you personally, just in the last week, I'm probably 40 hours at least into this project just in last week.
A lot of hours.
A lot of time. So take your time. Don't rush the process. Don't get frustrated if it doesn't work. If you hit your head against the wall, you go through and you've tested and you've put together stuff and nothing is really working for you, take a break. Step aside, go do something else. Come back the next day. Start with a fresh mindset. Look at the chart first and then reevaluate, because if you're ever in a frustrated position, you can't think clearly and you're just not going to come up with decent results. So be okay with taking a step back and starting over. Cool. So let's talk about optimizing, and then we'll probably go through one. We've got some time. I think we can go ahead and do that. So how do you optimize faster? Well, the first thing is you need to have proper expectations. There are some things that you can expect, and there's some things that you can anticipate, but proper expectations. The first optimization is going to take the longest, always. Why? Because you're starting from scratch. The second optimization, now we're talking about the second week, right? Like this is where you come up with your first optimization. The second time you optimize, let's say the first week you lose money, right? You're down. Next week, you might break even and it's starting to get better. And then by the time the third and the fourth roll around, you've kind of got an idea. Well, what are your ranges supposed to be? Remember, we looked at the examples on the spreadsheet. What are the ranges that you should be testing? What works and what doesn't? What's giving you consistency? You'll start to see these things. And as you keep notes, it's going to help keep you informed on what's working and what isn't. But if you don't have these notes, you got nothing to go on other than what the algo is telling you versus the other way around. You tell the algo does not necessarily tell you. Now, there's a time to let the algo decide, okay, it's in the corner over here throwing a fit, kicking and stomping and screaming, and everybody's in the store looking at you like you're a horrible parent because your child is on the floor screaming because you won't buy him a Captain America toy. Okay, so let the algo have its fit and then determine, okay, well, maybe the algo just really can't do what I want it to do. Then take note and change things up. And if that sounds like a familiar example, well, that's because it's familiar, except it wasn't at a store. It was at a Christmas party. And the Christmas toy, it was for some child in need. And my was probably 2 or 3-year-old son at the time was just so mad that he couldn't have the Captain America toy. So I told him it's for kids who have no toys. You have tons of toys. Yeah, I didn't understand that. Anyway, that's what I think of algo sometimes. um, so so as you keep notes, you're going to have less settings to optimize as you go because you're going to start eliminating some of those outliers. I'll give you an example here. If we go to engulfing, was it engulfing MNQ? Yeah, here we go. So here's a perfect example. So initially, when I started this off, it was from -10 to 50. Well, do you see any here that say -10? No, because there's too many trades and the commission was way out of line and it wasn't going to work. So I can change that. My range is 15 to 50. I think I think I left it at 50, but I was able to narrow that down. So now as I test moving forward, it's going to get quicker and quicker because I know I don't have to test everything under the sun. 20 to 40 by fours. Why by fours? Because it's a point and it's an even number on NQ. Do you see anything in here that says 40? No. So if a 40 came up on my next optimization, should I really take it seriously? Probably not, because it's an outlier. It's in left field compared to everything I've looked at. Has the market really gotten that much bigger in 2 weeks? No, it's summer trading. Markets are trash right now. So do I really need this to be 40? Or can I make it 28? Because I'm living in 20 to 24. Maybe I drop it down one and bump it up one. Now my range is 16 to 28 because that's what's relevant. Look at this 0.7, 0.6, 0.7, 0.8. Do I really need to be at 1.5? No, bring it down to one. Bar size 30 to 80 is what I tested. What's my range? 55 to 65. Okay. 45 to 75. Now I have my ranges tightened up. Now those back tests are going that much quicker and I know what to expect. And until I have multiple losing weeks in a row, I don't need to change these. I just keep running with it. If I start having issues, the first thing I'm going to look at here is the bar size. I'm going to look at maybe the 1,000 volume's not good anymore on that market. Maybe I need to go to a different time on the bar size. Then I can do that. Okay, so that's an example what you can do there. Okay, optimizing multiple markets simultaneously. Here's the thing with this one. You got to use the same bar type. So if you are on a 1 minute, a 3 minute, a 5 minute, cool, you can do that. If you're on a 1,000 volume, you cannot test MNQ and MCL on a 1,000 volume. It ain't going to work. MCL is like 50 volume. MNQ is like 1,500 volume. It's like 10 times the volume. That's not going to work. What about range? Well, could you do it on a range bar? Well, it depends. If you're on ES and crude, yes, you can do that on a range because they're similar in range. Any of those against NQ, not going to work. The NQ has 4 to 5 times the range of ES and crude. So you can't really test multiple markets in that way. But if you're on a minute bar, a 3-minute bar, a 2-minute bar, 2.5-minute bar, then you can optimize multiple markets at the same time. I would suggest 5 minutes. I did this on thrust breakout, and I'll show you those. So how do you do it? We're going to create an instrument list. Don't overdo the criteria. It takes quite a while to do these tests, as you can imagine. And then review the combined bucket. This is the similar concept of using multiple algos in a bucket. So let's say you only have one algo that you want to run. Say, for instance, it's the thrust breakout. And you know you want to trade it on a 5-minute because that's what works. And so that's your hypothesis. So you look at it and say, I want to trade thrust breakout 5-minute on a bunch of different markets. So let's take a look at how to do that. So I'm going to pull up a new strategy window. And we'll just get rid of the log for now. Let's go to thrust breakout. And cool. I'm going to go to template. I'm going to load the optimizer. Let's do that. Okay. So I've got everything pulled up here, right? So normally you're going to select an instrument. You're going to go, okay, I just want to test it on MCL, right? I've got this going from January until mid-July. Max net profit, commissions included. Cool, good to go. But I want to do more than one instrument. So here's what you do. You're going to go to Tools and go to Instrument Lists. Okay. And you're going to make a list. You're going to go Add, and you're going to call it Micro Gym because Gym is not very tall. So you're going to call it Micro Gym. But you can put whatever instruments in there. So let's say we've got M2K, CL. Let's say we want to add one more. We're going to put MGC. I don't know, just for fun. MGC. Maybe we want to add MYM. Maybe we want to test that one. Maybe we want to test nat gas. Nat gas is too expensive. I don't know. You can put whatever you want. But so then you put your markets in here and then you hit OK. Now, when you come in here, you go to Micro Gym, select all. It's going to test all of them. Now I'm only going to do it for a couple of days because I don't want this to take 10 years. So we go to July. So let's go, we'll just look at last week. I don't want to get too crazy here. And let's go look at some of the templates and what we're looking for. So now you can put in whatever you want to test. Entry offset obviously is going to be something that you want to test. Let's say I already know I want this to be 50%. I don't want to change those max basing bars. I kind of already know what I want the strategy to do. So I'm not going to put a ton of templates or parameters in there. But entry offset obviously is going to be different for each market. So I'm going to put that in there. I'm not going to change any of this stuff. These are my settings. I'm going to keep those. Risk $500 per trade. Cool. Minimum allowable stop obviously is a factor. And then stop loss offset obviously is a factor on these markets. They're all going to be a little different. And then I'm going to test it from 8 to 2. That's it. Not going to test anything else. And so I've got all these different markets. I'm going to hit run. Now it's doing 3,000 tests. And it's going to take a while. So I just want to see. Yeah, it's going to take a while. Yeah, when I did it before, it did take about an hour. And I did it on 4 markets. So I guess that makes sense. All right, so I'm going to get out of here because I don't want to sit here through this. Go away. And then you look at the results, and the results, I don't have them in front of me, but the best markets happen to be crude oil and MNQ. So I ran with those. So I have a template for MCL and MNQ, and you can do that. Now, obviously, you want to do less testing is beneficial. Obviously, the less you can do, the better. Okay, so here's my template on thrust breakout. Those of you that were in the trade room this morning saw me kind of trying to get hold of this trade as quickly as possible, and I missed it. And I wanted to take that trade, actually. And I missed it. But thrust breakout took the trade because thrust breakout is not me. And it knows that the setup was coming, and I didn't get to it quick enough. But thrust breakout did. And thrust breakout made money on that trade. So this one, 5-minute candles are not going to take a lot of trades, but they'll be good. Let's go back, custom range. We'll go, I don't know, we'll go back to May. See what that looks like. Thrust breakout is probably the best on crude, by the way. How do I know this? Because I traded this in live markets, and crude was by far the best. And it's kind of stayed in line with that. So this is a great pattern to trade on crude. Yeah, $3,000. Good stuff. Yeah, 3-point profit factor. Lots of profits, lots of profits. Only 13 trades. Not going to get a lot of trades on this one, but they're good. They're really good. Cool. So that's how you test multiple markets. And you really only want to do that once. You're not going to do that every week, but just find out which markets do you want to run, right? So cool. What else do we need to cover today? So let's go back here and let's develop a new template. Yeah. You guys want to make a new one? Is there any markets that you're dying to see that we have not produced a template for? And everybody's going to say, well, I am. Is there anything you want to look at specifically? Let me go into HG. No Bitcoin, no HG. And it has to be one of these algos and also not HFT and not Weibo. Market. Pick a market we haven't looked at. You guys still hear me okay, by the way? I'm getting a little nasty thing on my computer telling me. Springboard, I want to stay away from in this round. It's not very active. There's not a lot of trades on that one. GC 5 to 8. Let's do it. All right, so we're going to go to ready, set. Ready, set. And we're going to go to here. Let's do it even better. Let's go to the chart. Full size GC or micro? Let's do micro because it's we're doing the algo portfolio concept and that'll help us size position. So for this case, let's just stick with the micro. I'm just going to pull up a chart on MGC and let's go look at it. Yeah. Okay. And got it on 5 minutes to start with. That's fine. Let's pull up the algo. Ready, set. EMA period 20 is fine. Let's look at entry bar +3. Actually, let's do +1 because I want to see when I'm starting out, I want to see all the trades. I want to see everything. So I'm going to allow dojis, require bar, lower, low, higher, high. That I do want. I know that. No equal close, require EMAs. No, not yet. Bar 2 close in the body is fine. Max allowable. So how do you know what to set? You just kind of have to look at the algo itself and the manual and kind of know what it does first, and then you can kind of go through these. Max allowable pattern range. ATRs. Let's go, I don't know, let's keep it at 2. Allow outside bars. No, I don't want outside bars. 1 contract because I'm not sizing the positions yet. Minimum algo stop loss. I don't care yet. Stop loss offset. Let's go 5 ticks to start and we can change that up. We can go percent actually. Let's go 10% offset. Target type, we'll do risk reward 1 to 1. I like to only start at 1 to 1. Trade start time 5 o'clock, 8 o'clock. I assume that's Eastern time. That's what you wanted. I'm going to show the VM sub and I'm going to show moving average filter. I'm not going to require it. And I'm going to show a double EMA, even though I already have one. I'm going to do primary bars, and let's go 8. And we'll go 21 here. Let's go this one to 13. Change them up. Cool. So that's it. So I have no idea what this is going to look like. I'm just putting it on the chart, and I'm going to go take a look at it, and we're gonna see what we get. So let's start back here and go forward. No trades. No trades. Not a lot of trades. This one, I can't see. Let me see if I can change the color of these to just be non-existent or something.
You can change the Z order on that vertical line.
You can change the what?
The Z order.
I don't
Just
know that.
highlight it.
Oh,
Highlight it and scroll your mouse wheel. You're trying to get it to go behind the bar.
Yeah.
So highlight it, and
So when you say highlight, what exactly do you mean?
well, you did. You just clicked it.
Oh, okay, like that.
Just clicked it, and then hold down your shift key
Uh-huh.
and scroll your mouse wheel to push it behind.
What the junk? How do you know this stuff? Jeez, man.
I am the master of the universe.
What the heck, man? All right, that was pretty cool. Everybody give a round of applause to Jeff's gonna take a bow. Yeah, we'll send you the recording,
Come
James.
on, that's simple stuff, man.
Yeah, exactly right. Yeah. Simple if you know it. Wow, that was pretty cool. Okay, so there's our ready set, closed inside the body, swept the lows. There's the trade. Great stop location, great target. Same thing here. I'm just looking at, where are we at? That's a great setup too. Neither one of these had the EMA on our side. So we need to note that as we're going. This one did have the EMA on its side, and it did not make anything. It was a losing trade. So there we go. This one did have EMA on its side, and it worked. And this one did, but this one didn't. And this one went reversal, and this one went long, even though it was a terrible market to go long in, and lost. All right, so they're kind of all over the map as of right now. Some of the trending ones are working, some of them aren't. Some of the reversals are working, some of them aren't. What I will tell you though is I don't really like this on a 5-minute. So let's go down to 3-minute and see what that looks like. Okay, let's go back. So we got to think about what's happening at 5 to 8 as well. There's not a ton happening in that time. So we got to, kind of keep in mind, like, what is the market doing in that time frame? That day was trending. That day was kind of oscillating. That day was kind of trendy, actually. That one kind of trendy as well. So here's what we can do. Let's go into this. Let's go down to a 1-minute too, just to see what it looks like. We may not stick with 1 minute. It might be a little too wild for 5 to 8 a.m., but let's see. Yeah, that's a little bit too busy. Okay, let's go back to 3-minute. Now, the other thing we can do too is we can even look at it on a range bar. So let's go to full range. Oops. Full range 10. Let's see what this looks like. Yeah, lots of trades. Chaos. Man, oh man. It starts with a theory. So, yeah. Way too many trades. All right, let's bump it up and see if it's any better at 20. So initially, starting out, you kind of put some basic parameters in, and then it's kind of trial and error at first, really. Just go in and look and see what you're getting. And is it good? Is it not? The good thing about range charts is if the range isn't there, you're just not getting trades. So that's a way to ensure that you always have movement on your side. Well, I wouldn't want to do a rank go because then it's just going to be reversal bars are going to give the pattern. And that kind of defeats the purpose of this type of strategy. Let's look at it on a volume chart. See what we got on volume. This. Rounded volume, gold, MGC. Where the heck are we? What is this? 50. That is very low volume. Let's go look at it. I don't really think volume is going to work very well for us, but there's just not a lot of volume. So this is pretty busy. Let's triple this to 150. Yeah. Trade count is better. Candle count is better. So now we just need to go in and fine tune what it's doing. So let's check it out. All right, so this one was hitting the lows. So the things that I'm looking at is filters, things like market structure, moving averages, and momentum. So I want to look at this. Momentum's up, structure's up. Actually, technically, structure might have been down. Swept that low and then went up. And then this one, structure's up, but it's not above the EMAs. And maybe we need to be either really trending or not. Like this is a very fast EMA. This one's only 8. So maybe that's our ticket. I don't know. Let me go back a little bit. Let's go back to last week. We're going to go a little bit deeper in this process than we normally would in an AMA because I really want to, you guys obviously paid to be here, so I want to give you more. Yeah, looks good. See, but even that one worked, but I would say I would not want to trade that personally. You see that when it took that trade, it ran out of room to trade it for sure. So yeah, that short didn't work. That short didn't work. The longs are working. That one happened to work, and then this one didn't. Oops. So this one, that short worked, that one didn't. I would almost say on this one, you're probably better off having two templates, one for oscillating markets and one for trending markets, and kind of going about it that way might be the best option there. So this one, you wouldn't really want to go long. You would want to go short, but then that one failed. And then the longs start working. Okay, so at least we have a starting point. The chart is decent. I think it's a decent chart for this. So let's go to the analyzer now and start putting it together. First thing I'm going to do here is I'm just going to go to this template and save it so I can pull up these existing numbers. Let's go to save. I'll just call this MGC starting points. And another thing, I can go in here and get rid of some of those out of the folder, but I'm not going to worry about that right now. For the record, I don't know how I moved that, but it won't move back, so I don't care. Um, right, I'll go. MGC starting point. Here it is. Okay, so I'm going to try this at 8 on the EMA. And then let's go. I want to experiment with a higher time frame and higher time frame EMAs. So let's require that. I'm
You
gonna
might want to just explain that difference. I don't know that I get
yeah.
questions about for that.
Yeah, so this is asking, do we want to use our primary chart or do we want to use a higher time frame for the moving averages? So this is allowing us to call up the moving averages on a 30-minute chart. So when the 30-minute is bullish by the EMAs, then we're going to trade long. So that's what that's doing. We can also reverse these numbers if we want to take only reversals. So we might find something that works really great on trends, and then we might find something completely different that works great on reversals. So we can look at it that way as well. Let's go to MGC. So the first one I'm going to look at doing is trending. And we'll just go back to 4 weeks, I guess. So let's run this and see what we come up with here. Not a lot of trades, actually. When we filtered out for trending, took a good chunk of trades away. Don't worry about dollar amounts just yet. I'm more concerned with profit factor and win rates, and then drawdown versus profit. So, obviously it's only 1 micro is what I'm trading right now. So I'm not too worried about that. Yeah, that's pretty good. Pretty good starting point for sure. Let's go to the chart. So now you can see that this is our fast EMA that we're trading. It has to be on the right side of this to take a trade. Why does that look like that though? Did I mess something up? I want to do bar close too. I feel like this is not plotting correctly because it's moving. That's weird. Maybe it's only in the back test that it's doing that. I don't know. Have you seen that before, Jeff? It's kind of weird.
You're gonna have to run that by me again.
Yeah, watch. I'll show you. Sorry. No, it's not going to do it. So the moving average was moving on the bars. It's not doing it now. I'll show you again if I see it.
Okay.
The higher time frame moving averages are moving though. You see that? How it's, there, but then when you scroll over now, it's above the bar. Kind of different.
Oh, I think what you're saying is that they're on a different scale. They're on a different axis or something.
Yeah, you see that?
Oh yeah. So try something just grab one of those EMAs and then
Hmm.
try to drag it to the right margin. Just try to drag it to the right margin, see what happens. No. Try the other one maybe. The other one. You did the blue one, so do the white one. Oh.
Yeah, it seems like
I
it's
think
working.
you somehow dragged it to the other because you can just drag any element in the chart to the different margin, and it'll just
Yeah,
do
that's what
that.
it's doing. You see how that one
But
just moved?
yeah, so I think if you re-optimize or rerun this, it'll probably be fine.
Yeah, let's rerun it. Let's make our lives easy. Um, yeah, it's weird. See how it's off.
You broke it.
I sure did. That's what I do. I break stuff.
I'm not sure how you did that, but
I don't know. Very weird.
yeah, you're on the other scale
Yeah, I'm gonna go to
on
a
the axis.
chart and do it on the chart. Um, in fact, let's just pull up a brand new chart too. GC, just go 150 volume. We have a spreadsheet you can use, Eric, that will give you in the deliverables for this week. Or you could just, yeah, if you don't like it, you can make your own or whatever. You change it up however you want. And I think I got all my data. So let's add the algo. Okay, so we're going to require the EMA. I'm going to change this to the 8. Bar, I'm going to go to bar close on the entry. Percent 10 is fine. Okay. Still doing it. Hmm.
Maybe later on, send me that template or something.
Yeah, you see how there's the grid on the left too? So that's definitely
That's
what
the
the
issue.
issue is. I
That's the
don't
issue.
know
Yeah, that's the issue.
why it's doing that, but it is certainly the issue. Huh.
And so try grabbing any one of those moving averages, just highlighting it and dragging it to the right margin. Doesn't change anything.
Mm-mm.
Yeah. Okay. I
So
mean, I would imagine that if you,
it doesn't seem to
restarted
be.
everything,
Oh yeah, the
somehow, like if you restarted, it'd probably be normal.
yeah, maybe.
We can look into how, I mean, that's,
Yeah, we'll have to figure
it's
it
not
out.
normally something you would do, right?
Yeah. Um, Interesting. For now, let's go into it, and I'm gonna take off the EMAs for now, and we'll just look at them manually. Let me turn off the higher time frame and see if that fixes the issue. Nope.
Yeah. I mean, I'm going to guess if you restarted Ninja, it wouldn't do that, but I don't know.
Yeah, let's do it.
I haven't seen that before. That's a weird one.
It sure is.
Your whole, all of your graphics, the algo generates graphics on the screen and on the chart, and somehow you defaulted the axis for those visuals to the left
Hmm.
axis,
Yeah.
and now it doesn't want to, undo that. So I probably have to just restart everything. Probably.
Now let's try it.
I
Try to
may.
restart Ninja. Hopefully that'll do the trick. Just thinking
Uh,
about it. I saved the workspace too, just in case.
yeah, and I don't know if it would save that in the workspace file or not. I might do that. So you might have to start rebuild it. Huh, interesting.
Just thinking about closing down. Maybe. There it goes. Welcome to real life. This is,
I honestly have never seen that.
I mean, this is kind of like you do back testing and little quirky issues can come up sometimes. It's all part of it, you know. It's technology, you never know. You guys have any questions while we're waiting for Ninja to reload? Anybody have any questions? Ready, set. Somebody just asked for it. So so while we're waiting, I'm going to give you a link here. This is only for you, of course. Those of you that are in the event. This is going to have all of the templates, cheat sheets. We'll add those here. It's going to have the replays will be here once it's all ready to go. And then this will be your resource to be able to go back through and watch them again and all that. So we'll give you that. And while we're at it, since we're kind of waiting anyway, normally we would wait for tomorrow to do this, but since we're kind of hanging out and it's going all week, I'll do this again tomorrow anyway. We're going to go ahead and extend this offer to you as well for the 19 algos for the price of one. So if you are interested in picking up more algos, it's pretty tough to beat this deal. Obviously, it's not 24. You add it to the cart and view the cart, and you actually do need a coupon code. So let me give you the coupon code. We'll send this to your email as well, of course, but let me grab the code for you. Okay, so that's the code. 19 algos for 1995. The only ones that do not come with are engulfing and pin bar, and then the new one that's coming out, obviously, because it's not out yet. But all but two algos come with this. So should be the same. Yeah, it should be the same one. So yep, decided to extend that for this. So yeah, good stuff. Let me close this workspace because I don't trust it, and we'll bring up a brand new chart. I don't know about you guys, but my Ninja Trader kind of takes forever to do stuff. So bear with me while I get it going. A new chart, MGC. 150. That's a start. Oh, wrong connection. All right. Let's see if we can do this now. And just mad. I got tick blaze now. I don't need you. Eight. Require EMA. I'm not going to add the higher time frame till I know if I can get this to work. Drum roll. It looks correct. Do, 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 do. Oh, why there's a scale on the
You
left,
still
but
have this, you still have the scale
I
on the
don't
left.
know why that is. It's dumb.
Well, one thing you can do to prevent that rescaling
Mhm.
is to set the scale on the left and the right. Like we'll have to figure out why you're doing that, but for right now, set a fixed scale for the left and right scale margins. You know what I mean?
No,
Well, just right mouse click in the margin, in the right margin.
and the right one.
Yeah, either one. Properties.
Okay.
And for see how it says left scale and right scale,
Uh-huh.
the first one said instead of automatic, say fixed,
Okay.
and then set it the same high min and max for both. Just set both have the same min and max.
Yeah.
You know, it'll rescale when you scroll left and right, but at least they'll be on the same scale and they won't shift around so you can actually look at it. See what I'm saying?
Yeah. So if I go to fixed on both, will that work? Maybe. No,
Well, they have
I
to
have
be
a
on the
lofted
same scale.
scale. Yeah. That's weird.
Yeah, you're gonna want to send me that template.
It's just strange. Right side, chart trader, show days. Anybody else know what the deal is? Grid line. Yeah, I have no idea.
It's not in the data series. It's the chart. It's a chart properties.
Yeah, that's what I was in. Chart
Okay.
properties.
Yeah, it's the margin. So if it's gonna keep doing this, you just need to set the left and right margin to the same fixed scale so that they're on the same
Sure,
scale when you scroll.
that's fine. The question is, are the trades valid? Which it here, let me do this. I'll put a regular email on here. What a strange, quirky thing. I mean, that's below the EMA, so we'll just deal with it for now. I'll just go in and look at the trades, which is what I wanted to do anyway. Okay. Short, long. So that one was nice. And I think I might have had more room on that one. Yeah, right. I hear you. That was a nice trade. So these are only taking like the trending ones that are beyond the EMAs. That one was a stop, but pretty tight stop, so that's fine. Let's look at this one. That's a very tight trade, but it worked. That one did not. That one did. That one definitely did. Yeah, that looks pretty good. So what I'm doing here is looking at entries, obviously, but also looking at stop and target placement to see, is there a better way to do this? This one was, you see how these are percent differences. Sorry for the EMAs moving around, but you see how much lower this stop is compared to this one? Like, I don't know if I really want that, and the way to get around that is to change these to ticks. So I'm going to go in here and change up a few things based on this. So I'll just go in here.
Hold on a second, Jim.
Yeah, what's up?
I think all of the graphics are are having that same issue of being on the left. Like you want to make sure you have the scales the same before you start evaluating where those stops are.
Uh-huh. Oh, yeah, that could be.
Oh wait, now I don't see the scale on the left. So
Yeah,
you're
because
looking at something
it's
else.
yeah, it's there's just the EMA.
Okay, never mind. I thought you were on that other chart. Never mind.
Oh, you're good. It is the same chart. It's just I disabled the algo. So it's probably something in here.
Oh, okay, I got you.
Yeah. Um, so I'm going to require the VM histo, and I'm going to not show the EMAs since I suspect that could be the issue. And let's go back up. So entry offset. Let's try bar close, see what that looks like. That's fine. In body's fine. And then let's change this to ticks and let's go 5 ticks beyond below. And let's see what this looks like. Still got that scale on the left for some reason.
Did you just reload a saved workspace or did you just rebuild it from scratch?
No, I just built a new chart.
Okay.
I don't know, man. Stranger things have happened. Okay, so let's see what we got here. So beautiful trade. These are really small now. Let's go into the strategy performance first. Thanks for being patient, guys. Appreciate it. Some of this stuff just can't control. Clearly I messed something up. I don't know how I did it, but I pulled it off, so that's fine. All right, so we've got 29 trades. It's about 1.6 trades per day, which is great. Actually, that's kind of right where we'd want to be. Total profit, not stellar. Drawdowns bigger. Look at the time of day. Not a lot of trades, so it's hard to even really consider any of this yet. So this one kind of got faked out. I feel like, I'd want to have a bigger bar size or something on this one. This bar is very small. Let's put in a minimum trade size to help avoid some of those. So we'll go back in. And let's do minimum allowable stop. Let's go 10. See what that does for us. Just only change that one parameter right now. A little bit better. We still got this trade here, and I would love to filter that out. So let's go in and see what size that is. That one is 10 ticks. So let's bump it up one just for fun. I would think from 5 to 8, if you average one trade a day, that's probably pretty good. Yeah, there, now it's gone. Let's go to performance. Any better? A little bit. We're still not quite clipping the decent enough win rate. So again, looking at the trades, you want to look at conditions, moving averages, and the histogram and entry locations, direction. This one again, it's these really tiny bars are the ones that are kind of getting us in trouble, but then this one worked. So this is the better setup. You see how these bars are bigger and then this is closing there. Like there's more power behind those moves versus this is just a drop, tiny drop base rally. And then this one is again kind of just basing bars. It's not really giving us much to work with. The bigger bars are doing better. So if I'm not mistaken, there is a minimum bar size. So let's go check that out. Okay. Max allowable pattern range, bar two. There is not allowed doji. Yeah, it might be better 7, huh? 7 o'clock. We'll see. So we can only set a max. Let's go crazy on that. We'll go to 3 just for fun. And bar two, I still want it to be in the body. Try that. See, that didn't help actually. All right, so let me pull up. Let me save this first off. But now at least I've had a chance to kind of see what's working for me, what isn't working for me. And then we can go in here and maybe tweak it some. Ready, set. We can go even quicker if we want. Let's try 7 and GC. I'm going to go back a little bit further too. I'm going to get a bigger sample size of more trades that we can look at. All right. Now we got some trades to work with, about 144. So I don't know that this is really doing a ton of good for us on the very trending type of trades. I'm going to try it without the EMA and see, are we getting anything different? Not necessarily worried about better or worse, but like majorly different, you know? Good way to refer back to what you've kind of started with or seen is to just keep the log available. See, this is not, really in the theory, it's not really helping us to have the major trending type of scenarios. Let's try turning off the momentum. See if that helps us at all. And it could be that on gold, this one's just better as a reversal tool and not as a trending tool. I got a whole lot of trades now, which makes it a little easier to optimize. Um, so what I'm going to do here is I am going to turn the moving averages back on, but I'm going to kind of set it as a reversal tool using the primary bars. And I'm going to flip these to 21 and 8. So now it's going to become a reversal tool because if the 8 is below the 21, it's actually going to go long instead of short. Did I hit require? I did not. Yeah, so really not getting too far. Let's see if there's any, time that kind of stands out as like the key. I mean, I'm seeing like it's really been tough. I'm going to shave this down to just 7 o'clock and just see if we can maybe work on kind of going that route. What time is the pit open on gold? Is it 8:20 or 8:25 or something like that? Let's look. I don't normally trade gold. Pit times. Is it 8:20? Okay. Let's go 8:10. Let's bump this up to 15 just for fun. Yeah, I don't know. Let's try an intrabar. Yeah, they're all kind of hovering around that 45 to 48% win rates. There's nothing fantastic going on here. I don't know. This one would take more time, and we really don't have a ton of time to go through this here. Some of these trades look really great, though.
Hey, Jim, I have another thing to try. I was just talking to the developer, if you want.
Uh-huh. Yeah, sure.
So grab one of those moving averages
Mhm.
and drag it to the right margin, but not in the right margin, like just to the left of the vertical line. Like it's like you have to, or maybe just a little, like somewhere in that very close margin. I mean, I just did it on mine. It's hard to explain how to do it.
Hmm.
it's either it's I mean, I just did it. I can go back and forth. It's just hard to explain where to let go of the mouse button. All right. Well, we can work on it offline. I can show you, but I mean, I just figured it out I can do it on my chart. It's just hard to explain. So
yeah.
Anyway.
Yeah, I'll have you show me later. That's weird. Let's see. I really like that. And then, we've got this one that didn't trigger, which is actually good, but this one, no, that wouldn't have triggered. This one didn't close inside. Let's go to a smaller bar and see what that does. This one's pretty tough, but I'm kind of, it would take time to go through this one more in depth, and I'm not familiar enough with that time frame and market to be able to do too much damage here, it seems like. Yeah, I'm about 50-50 on this. Let's go to a minute bar again and just see if that's any better.
I got one more thing to try when it's done.
Yeah, sure.
Let me explain it. So change the margin between the last rightmost bar and the margin so that there's more space there.
Sure.
And then drag it into that space.
Okay. Let's try it.
It's properties. Just make it like a bigger number. 40 or something. Now take that and drag it into that space. Or, either very close to trying different places, but it's got to be okay, why is it not working for you? It's doing it for me.
I told you I break stuff. Yeah, I don't know, man. So
we'll do it later.
So performance is better, so that's good. Let's go to analysis. 730 to 830, but 7 is 40%. I don't know. Jury's still out on that one. Let's go look at the chart as much as we can. Great trade. That one looks good. Yeah, I don't know that I'm going to get too far on this one. Yeah, I'd have to go with something else. I'll keep messing around if I have time. Maybe take a look at some different things on MGC and that pre-market, see if I find anything good. So I'll kind of tinker with it a little bit, see what I find out. But yeah, interesting. Yeah, no worries. Yeah, we'll try different things. A lot of this is trial and error. Sometimes you try things and it works great, and sometimes it doesn't. And you don't know until you try, right? So it's good. Always a good exercise it helps you get better at the process too. You try different things that work or don't work. So, but I think we're probably pretty good for the day. Let's kind of recap on what we've covered so far. Yeah, avoiding over optimizing. So the things that you can do, again, keep notes. Always keep notes of what you're doing, because it helps you understand what's working, what isn't working. If you ever get to a point where you're like this, where you're like, I'm battling with the scales and the averages and the algo, and nothing really seems to work, right? So best thing to do is just come back another time, try something else later. Um, don't keep trying to force the issue. If it's working for you, great. If not, pivot and do something else. So don't ever get hung up, because you'll just make yourself crazy and then you'll want to throw your mouse across the room. Record your results, record the forward trade results, notate on each trade. So when you are actually trading it forward, take images of those trades. And I know it seems like, it's kind of over the top, and it is. because if you want to be in the 5%, you got to be willing to do what they're not willing to do. Take pictures of your trades and go back and look at them. What worked? What didn't work? Is there something you wish you could change? So take images and then note the trades. As you do more optimizations, you'll find those kind of common settings that will be the go-to, where it's like we talked about kind of trimming those down as you move forward because you know that the other ones just don't work. So why even bother messing with them? Stop looking for perfection. If I can stress anything in this approach, you do not want or need perfection. And why would you say you don't want perfection in this? Because if you're finding perfection in the optimization, then you are probably over optimizing. You don't want perfection. You want consistency. That's what we want, right? Up and up and up and up. You're not going to get this from backtesting. You're going to get this from trading forward, learning what works, what doesn't work, and then going back and getting into some sort of like we say with we've got the guardrails. We know what works, what doesn't work. I don't need to worry about looking at all these different settings tagged against each other because I know, these three are the relevant ones that I need to test against each other and run with those. So don't worry about perfection. You want it to be good, but you want it to be good every week, not like really, really, really good. And then you got to go through and do tons of optimizing again because you got to keep recreating something entirely different every week. Like it's not scalable. So good, but not perfection. Look at the chart. Always, always, always look at the chart. Anytime you do anything, look at the chart. Because you need to be able to see what's happening, what's working, what doesn't. I was just looking at on that last example, market was doing this kind of thing. And yes, it was a reversal, but it was like, trading back into the highs. And so that was our reversal going long. Like, I don't want that trade. So that's just not a good scenario. So how do I get around that is the question. And so there's different things I would have to look at to determine what works. Less than 20 trades tells you nothing. So here's the thing. If you optimize for 4 weeks and let's just say you've got 80 trades, right? 80 trade average over 4 weeks. Well, that's 20 trades a week. So if 1 week you go 5 wins and 15 losses, does that mean that it doesn't work? Does that mean you need to completely reinvent the wheel? No, that just means it was not a great week for the algo. Obviously you go back through and optimize and take a look and see, was there something that could have gone better? But if the previous 3 weeks before that were profitable, then this could just be a tough week of trading. It doesn't necessarily mean anything. Now, if you're doing this 2 and 3 weeks in a row, then obviously something's wrong. But don't let 1 week just throw you off, because if you look at random number distribution, even if you have a 70% win rate, chances are out of a 20 trade, span, the chances that you're going to get 15 losses is probably pretty realistic, to be honest. You might not get 5 in a row. That might be kind of an anomaly, but even that could be possible. So the point is, don't, over a string of 20 trades, don't freak out. If it's a string of 50 trades, that's different. Then something's up, right? So don't let, the last 20 trades kind of throw you off course. So a lot of these things can help you with getting better at optimizing, not over optimizing. The key to algos is, yes, optimizing, but you got to trade it forward and just watch the trades, look at the charts, make sure, you're on the right track there. So that's pretty much it for today. I think we've covered it. We went through some good stuff today. We'll dive in deeper, even more tomorrow. Today was kind of like prepping and getting ready for trading the algo portfolio. Tomorrow is going to be more about how do you implement it? How do you actually trade it? How do you put it all together? how do you plan it? All of that is going to be tomorrow. So we'll dive in deeper tomorrow. And if you need anything or have any questions, reach out and we'll do our best to get back to you right away. Support is always your best resource. If you have questions, I tend to be not as quick as I used to be in getting back to people. I just get really busy and bogged down and a lot going on. So, but I always try my best. So if you do reach out to me, I will get back to you, but support's always going to be way quicker. So reach out to them first and they'll track me down if they need me. So cool. I think we're good. Jeff, thanks for your help. Appreciate you being here to help us out when we need
no
it.
worries. No worries.
And good. Glad you guys enjoyed that. That's awesome. Good. Well, we'll get back to it tomorrow. We'll see you there. If you have any questions, reach out. Otherwise, see you back here, same place tomorrow at 2 p.m. Enjoy the evening and we'll catch you later. Take care, everybody. Cheers.